Is BRICS truly trying to overthrow the global financial system as we know it? It's a pretty provocative question, right? Because what we're seeing unfold, well, it looks like a strategic competition that could genuinely reshape the entire global economic landscape.
Absolutely.
On one side, you've got the established Western-led financial order, anchored by the mighty U.S. dollar. And on the other, a burgeoning block of emerging economies, the BRICS nations, who seem to be actively challenging that very foundation. So today we're taking a deep dive into what's become, frankly, an undeniable battle for global financial control. Our insights are drawn from a really insightful report, BRICS contre Occident, le combat monétaire mondial. And our job here is to unpack the most crucial bits for you.
And it's important to stress this isn't some sudden clash that came out of nowhere.
Right.
What we're actually observing is a much more gradual, kind of multifaceted shift in global power dynamics. At its core, look, money is power.
Simple that.
And this challenge, this direct challenge to the system, largely built by the West, it carries profound, really long-term implications. The dollar's dominance, it's not just about trade figures or finance, Yeah. It's intrinsically linked to the United States' hard and soft power. This dominance is what uniquely allows the U.S. to finance truly staggering deficits at low cost and, well, project military strength across the globe. For decades, the dollar has been the undisputed cornerstone of financial supremacy.
Okay, that sets the stage perfectly. So if this is a high-stakes financial drama, who exactly are the key players on this global chessboard?
Well, on one side, obviously, you have the BRICS nations themselves, Brazil, Russia, India, China, and South Africa. Now, this group, they represent a really significant chunk of the world's population and economic output. And they share a clear, common ambition to strategically, step-by-step, reduce their reliance on the dollar-dominated global system. We've seen them expanding their influence, too, with recent talks about adding new members, which just highlights their growing economic and political weight.
And on the other side, you have this seemingly impenetrable fortress, the U.S. dollar. How did it get such a commanding position, and what makes it so hard to dislodge?
Well, for decades, the dollar has been, like I said, the cornerstone. It's underpinned by, first, its perceived stability. Then there's the sheer scale of the U.S. economy. Huge. Its pervasive geopolitical influence, and critically, the unparalleled liquidity of U.S. government debt. I mean, the statistics are quite striking.
Yeah.
Something like 64% of global debt and maybe 84% of global transactions are conducted in U.S. dollars.
Well, even though the U.S. is only about 10% of global trade.
Exactly. That massive, disproportionate share, that's what we often call the dollar's exorbitant privilege.
Right.
It essentially lets the U.S. finance its deficits at remarkably low interest rates because there's just this persistent global demand for dollar assets. And this financial advantage, it's deeply connected to America's military strength and its whole network of alliances. Security guarantees, political affiliations, especially with U.S. military allies, they directly drive the holding of U.S. assets and dollar reserves.
So it's not just pure economics then. It's about these deeply entrenched habits, this existing infrastructure. The report mentions inertial effects and network externalities. What does that really mean for, say, a global company or a central bank? Is it basically that everyone uses the dollar because everyone else uses it, creating this powerful loop that's just incredibly hard to break?
That's exactly it. Think of it like a positive feedback loop, right? The more people use the dollar, the more liquid it becomes.
Okay.
The easier it is to trade, and the more financial products get built around it. That convenience, that efficiency, the deep liquidity in dollar assets, it makes it incredibly difficult for countries or businesses to just flick a switch and move away from the dollar.
Like trying to change the whole electrical grid overnight.
Precisely. The infrastructure, the legal frameworks, the clearinghouses, they're overwhelmingly geared towards the dollar. It's deeply embedded.
Okay, that context is critical. So given everything you've just laid out about the dollar's power and how entrenched it is, why are the BRICS nations pushing so hard for de-dollarization now? What's the main catalyst here?
The primary catalyst seems pretty clear. It's the increasing weaponization of the dollar through U.S. financial sanctions.
Oh, okay.
The freezing of Russia's dollar assets back in 2022, that served as a stark global wake-up call for a lot of nations. It fundamentally changed the perception of dollar reserves. They went from being seen as these trusted stores of value to potentially politically contingent instruments.
Meaning they could be taken away based on politics.
Exactly. This perceived coercion, it incentivizes countries, even nations considered once staunch allies, to actively diversify away from the US dollar just to reduce their exposure to political risks, like asset freezing. That single event, as the report really emphasizes, sent shivers down the spine of central bankers everywhere.
And it's not purely geopolitics driving it, is it? There are economic pressures, too. We're seeing escalating U.S. national debt, persistent inflation concerns within the U.S. that also contributes to the dollar maybe looking a bit weaker.
Right, absolutely. Those factors play a role.
And then you throw in the unpredictability of U.S. economic policies. Like, former President Trump explicitly threatening additional 10% tariffs on BRICS nations. Things like that definitely heighten investor concerns and push countries to look for alternatives.
Adds to the uncertainty.
So the why seems clear. Now, here's where it gets really interesting. What are the concrete strategies BRICS nations are actually deploying to achieve this financial autonomy? What's their playbook?
It's definitely a multi-pronged playbook. First off, we're seeing pretty aggressive central bank diversification and gold accumulation.
Okay.
The U.S. dollar share in global foreign currency reserves has dropped quite significantly. It's projected to hit a record low of maybe 57.8% by the end of 2024. That's down from around 70% back in 2000.
That's a big shift.
It is. And at the same time, central banks are accumulating gold at an unprecedented pace.
Yeah.
More gold bought in recent years than, well, any time since 1950. Gold is increasingly seen as a safer haven and perhaps more importantly, a politically neutral asset, especially with the rise of financial sanctions. China and Russia, for instance, have been specifically buying up gold to cut their dollar holdings.
Okay, so diversifying reserves, buying gold, what else?
Secondly, there's a strong push for local currency trade settlements. You see Southeast Asian and BRICS economies formalizing these kinds of schemes. Some projections suggest maybe a 15% reduction in dollar invoicing just within the ASEAN bloc over the next 5 years.
And we're seeing this happen already.
Oh yeah, we're already seeing it in action. Countries like Bolivia, Argentina, Brazil, they're increasingly using the Chinese renminbi, the RMB, for trade payments.
Interesting. What's the third pillar?
Thirdly, they're developing alternative payment systems. Things like the BRICS Pay initiative, designed for direct settlement in local currencies. China has also developed its own cross-border interbank payment system, CIPS. It's positioned as a direct alternative to SWIFT, but specifically for renminbi transactions.
So bypassing the traditional channels.
Exactly. But it's not just these big new systems. We're also seeing the growing importance of real-time payment networks. Think India's UPI or Brazil's PIX. Now, these domestic systems, they aren't direct SWIFT alternatives globally, but they're becoming so efficient for local and regional transactions that they kind of lay the groundwork for easier bilateral trade settlements without needing the dollar as the go-between, especially in their own regions.
Got it. And the last piece.
And finally, there's this emerging concept of the petroyuan. China, being the world's largest oil importer, has introduced a UN-denominated oil futures benchmark. This is a clear signal, really, of a potential challenge to the long-standing petrodollar system. JP Morgan, for example, noted that a large and growing proportion of energy is being priced in non-dollar denominated contracts. That points to a tangible shift in how global energy trade is starting to operate.
Okay, so the momentum for de-dollarization seems undeniable. They have a plan, they're acting on it. But as we discussed earlier, the dollar's position is so deeply embedded. What are the big obstacles standing in the way of this new monetary order? Is BRICS truly strong enough to challenge the dollar, or are there maybe cracks in their own foundation?
Yeah, despite all the ambition, there are significant hurdles. Take the Chinese yuan, the RMB. China definitely wants to internationalize it, but there are still heavy restrictions on capital flow and monetary exchange.
Things that limit money moving freely in and out.
Exactly. Practices that most advanced economies abandoned quite a while ago. There are also persistent concerns about the transparency and, frankly, the governance of Chinese financial institutions. Domestically, a really strong yuan probably wouldn't be welcomed by China's huge manufacturing sector. It would hurt their profits.
Right.
And full internationalization. That would make it much harder for the People's Bank of China to manage monetary policy just for China's own interests. Plus, China's pretty prohibitive stance on cryptocurrencies, driven by worries about financial instability, that also limits its financial openness compared to other systems.
Okay, so challenges for the yuan itself. What about a broader BRICS currency system?
There are challenges there, too. You've got non-negligible volatility across many currency pairings. Why? Because the exchange rate policies among BRICS countries are varied and largely uncoordinated.
So big swings in value between, say, the real and the rupee.
Potentially, yes. And without harmonized stabilization tools, the central banks involved could end up absorbing significant currency risk. Then there are critical usability and liquidity issues. If Brazil earns a lot of Indian rupees through trade, can they easily use those rupees to buy something from South Africa or invest them readily? Especially if trade flows are unbalanced.
So the money might get stuck.
It might. For a system like this to really take off, it needs to go beyond just central banks. It has to be easily usable for day-to-day business by commercial banks, by companies. That requires truly interoperable platforms and, importantly, robust legal backing across all the member nations. That's a big ask.
Okay, this raises a really important question then. If the dollar's exorbitant privilege genuinely starts to erode, what would a significant shift away from its dominance really mean? For the U.S., for global investors, for the world, what are the big implications?
Well, for the United States, a diminished dollar would have pretty substantial economic consequences. Almost certainly, it would lead to upward pressure on interest rates. Because as global demand for U.S. bonds potentially wanes, the U.S. would have to offer higher interest rates to attract buyers. That increases borrowing costs for everyone, the U.S. government, corporations, consumers trying to get mortgages or loans.
Okay, so borrowing gets more expensive across the board.
Yes, which means higher real yields on U.S. fixed income assets. Domestically, a weaker dollar also tends to exacerbate inflationary pressures because imported goods become more expensive. That erodes consumers' purchasing power. And you could also see a negative impact on U.S. stocks if there's a severe loss in confidence among global investors. That exorbitant privilege, it could genuinely transform into an exorbitant burden, bringing higher costs like fiscal instability and inflation risk.
Wow. And beyond the pure economics, what about geopolitics, military influence?
That's where the implications get even more profound, perhaps. A significant reduction in the dollar's role would fundamentally shift the balance of power among countries. The dollar has been such a potent symbol of U.S. hard and soft power. Its decline would inevitably diminish U.S. political leverage. Think about sanctions. The ability to impose financial sanctions is intrinsically linked to the dollar's dominance.
Less dominance, less power to sanction.
Precisely. Moreover, the dollar's hegemony is what allows the U.S. to sustain those staggering deficits at low cost and fund its massive military at enviably low rates. If the U.S. loses that privilege, all public spending, including that huge military budget, becomes significantly more expensive.
Which could lead to cuts.
It could. And a weakening military could, in turn, further erode the U.S.'s borrowing privilege. You potentially get this vicious cycle of rising interest rates and waning global influence. Military strength, as the report notes, is a cornerstone of financial supremacy. If that erodes, it severely impacts U.S. global leadership and its ability to uphold alliances.
But there must be an upside for other countries.
Oh, absolutely. For other nations, especially emerging economic blocs like BRICS, de-dollarization presents real opportunities. Advantages like better risk diversification for their reserves, the potential strengthening of their own national currencies, and crucially, reduced vulnerability to U.S. sanctions. This dynamic could genuinely foster the emergence of new centers of financial and geopolitical power.
Like BRICS itself.
Like BRICS, potentially. And think about developing countries with lots of dollar-denominated debt. A weaker dollar provides tangible relief. The cost of servicing that debt when they convert it from their local currency goes down. That offers much-needed fiscal breathing room.
So, pulling this all together, what does it mean for the future? Are we really witnessing the dawn of a completely new world order, or is it something more nuanced?
It's definitely complex and very much ongoing. This battle for global financial control isn't over. While the U.S. dollar's dominance is clearly under significant pressure from these geopolitical shifts and deliberate de-dollarization efforts, its deeply entrenched position, those network effects we talked about, mean that a rapid or complete collapse is highly unlikely.
No sudden crash.
Probably not. It's more likely to be a gradual, maybe multi-year unwinding of its extreme dominance. Instead of one single new currency taking over, the future global monetary system is much more likely to be multipolar or maybe fragmented. Meaning we should expect things like regional currency blocks and bilateral trade agreements to become much more prominent. Think the Eurozone, maybe an RMB bloc, perhaps others. This will inevitably increase the complexity of international finance and trade. And this prolonged transition period period is likely to come with heightened financial volatility.
Right, the dollar's sort of 14-year bull run facing a gradual unwinding, as you say. And what about the role of digital currencies in all this? Could they speed up the fragmentation or maybe, surprisingly, reinforce the dollar?
That's a really fascinating layer to this. On one hand, some digital innovations, like central bank digital currencies or new cross-border payment systems, could accelerate diversification away from the dollar. But somewhat paradoxically, the current dominance of USD-denominated stablecoins in the crypto world suggests that digital finance might actually reinforce dollar usage, at least in the short to medium term. Why? Because they provide new, super efficient ways to transact in dollars.
Interesting twist.
Yeah. The big challenge for any non-dollar digital currency, whether from a central bank or the private sector, is overcoming that massive entrenched liquidity advantage the dollar still holds, even in digital form. It's definitely a key area to watch closely.
So ultimately, this deep dive really shows us the battle isn't necessarily about one side definitively winning or losing, but maybe about a fundamental rebalancing of global financial power.
I think that's a good way to put it, a rebalancing, a fragmentation.
And the real question then, for all of us is, how will we adapt to what looks like an increasingly complex and fragmented international monetary landscape? If you found this breakdown insightful, subscribe to Venture Sages, where power, money, and geopolitics collide.